Okay, so let's walk through this project together. If you turned your project in and you didn't get the score that you wanted on it, I've allowed for a couple of different attempts to turn this project in. Now with my seated section, I did walk through this project with them in class after they had attempted it, so I want to do the same thing for you guys. So if you didn't get the score that you wanted on this, go ahead and follow along with this video and then resubmit that submission. This should get you where you need to be. So when you first open this project up, it's going to present this information to you. You do not need to input this information manually. You will hit the Open in Excel button here. It will open this up to you for you in Excel, and it should populate everything you need right here. Okay, so all of those numbers that you need, all of that is in there. Now you won't be able to type in any fields or cells that aren't highlighted in yellow for you, except down here you do have what they call a scratch pad, where you can kind of type whatever you want. But you shouldn't really need to use the scratch pad much at all. So what they give you here is a little bit of information about a company and a piece of equipment that they've purchased. Now this is a depreciation problem. Okay, so they're going to tell you paid $115,000 for it. We think our residual value is $25,000, and we have an estimated useful life of 6 years, and then we're going to sell it in 3 years at the end of year 3. Okay, so requirement number 1, they ask, based on the information above, calculate the depreciation expense, the accumulated depreciation, and the book value of the equipment using straight line method for years 1 through 3. So we need to calculate depreciation expense first. Notice here there are very explicit directions for you to use cells A2 to B11 for the information above to complete the question. They want you to use formulas. They don't want this hard-coded in. So how do we find depreciation expense? Well, depreciation expense is going to be our original cost less the estimated residual value divided by 6. So the original cost less the estimated residual value gives you your depreciable base. You divide that depreciable base by the estimated number of years it's going to be in use, in this case 6. That gives you your depreciation expense. And since we are using straight line depreciation, our appreciation expense will be the exact same every single year. Okay, so what we want to do is we want to type equals, open parentheses, B4 minus B5 divided by B6. Okay. Now, I'm going to make absolute references here. These dollar signs are what we call absolute references. Okay. Absolute references mean that this formula will not change. So if I copy this formula down, it doesn't change. Notice in our formula bar up here, it is the same for all of them. Okay. So now we need to calculate our accumulated depreciation. Okay. So for year 1, how much depreciation have we accumulated? $15,000, right? For year 2, how much have we accumulated? Well, we could do this a couple of different ways. We could say 15,000 times 2, right? Oops, sorry. We could simply say it's that 15,000. Forgot to put my multiplication sign in there, times 2, if this would work. Sorry, of course, it's being difficult. Now it's working, right? So we see we've got $30,000. Or we could say it's this plus this, and that gives us 30,000. Okay, and then you can just copy that formula down, and we'll see that we get 30,000 and 45,000. So we've accumulated this much depreciation over the course of 3 years. Now, how do we find our book value? Well, our book value is our original cost, right, less our accumulated depreciation. So we're going to take our original cost, we'll make that an absolute reference, and we will subtract our accumulated depreciation. Okay. We will see that we have new book values. Okay. So that's how we do the requirement number 1. For requirement number 2, they're asking us to assume that we sold the equipment at the end of year 3 for the sale amount in cell B9. Okay. So we sold it at the end of year 2 for $75,000. So what is that sales amount? Well, it equals $75,000. Okay, that's an easy part. What was the original cost of the equipment? Well, it's $115,000. What is our accumulated depreciation at the end of year 3? $70,000. What is our book value at the end of year 3? Well, it's this, our original cost, less our accumulated depreciation. That's $45,000. Or we can simply go up here and pull it from our table. Okay. Now, here is where we need to be careful. Note that the directions tell you to input a conditional if statement to return the word gain if cell C43 is positive and loss if it's a negative. So what we're going to do is we're going to type if. And once you start typing in a function or a formula in Excel, it will tell you exactly what that does. So for this one, it tells us this formula or this function is going to check whether a condition is met. And if it is met, it'll return one value that we determine if it's true, and a different value if it's determined to be false. So open parentheses, our logical test is going to be, is C43 greater than 0? If it is, return the word gain. If it's not, return the word loss. Okay? So right now we can tell this is a loss. Now, how do we determine our gain or our loss? Well, it's our book value less our proceeds, right? Or, excuse me, sorry. Proceeds less book value. So what were our proceeds? Well, our proceeds are the sales amount less the book value right there. And you can see we have a gain of $30,000. Okay. Now they're going to ask us to type in the journal entry for this. Very simply put, we're going to increase cash with a debit because it's an increase to an asset. We're going to increase that by the amount of cash we got, which was $75,000. Our accumulated depreciation, remember, this is a contra asset account, but we're trying to reduce this because we're getting that off of our books. So we're going to debit it. Okay. We're going to credit our equipment because our equipment is an asset and we're trying to get it off our books. We're going to credit that for the original amount. And then we need a gain. Now here, it's telling us that this will auto-populate based on part of our answer in part A. It's not going to, so we need to do a formula here, another if formula, and we're just going to say if A43 is equals gain, then gain, else make it blank. Okay. So we should populate gain, and that should get you the points to it. If you just type in gain there, it's not going to give you the points. Okay. So what is our gain? Well, pretty easy to just use our gain, but how else could we tell? Well, that 75 plus 70, if we look down here in the corner, it tells us is 145,000. Well, our equipment was only 115,000, so we know we need an additional $30,000 credit. That credit comes from a gain. Why is gain being credited? Well, because gains really are just an other type of revenue, and we credit revenues to increase them. Okay. So we're going to do the same thing here, except we're going to assume that the equipment is sold for the amount in B10. So we can say equal to B10 F4 to make that an absolute reference. So now we see we're selling it for $65,000 instead of $75,000. What's the original cost of equipment? Well, that was in cell B4, I believe. Accumulated depreciation we found here at the end of year 3. Okay. And our book value at the end of year 3, still the same, right? Not changed at all. We're going to use the same formula here. as we used up here. Okay, so we can copy that formula and drag it down. We just need to change our reference to C65 instead of C63. Okay, it's going to show up as a loss here because technically that loss is not greater, that the cell is not greater than 0 yet, right? Well, how do we find our gain or loss? Well, it's our proceeds less our book value, right? So we know our proceeds are this, less our book value, which is this, and we see we now have a $5,000 loss, okay? This one actually auto-populated correctly, the way that it should have. You can see we got the same kind of formula as we put into cell A53 there. So what's our loss? Well, a loss is just another type of expense, right? So we are going to calculate, or we're going to put our loss amount in here, right, as 5,000. Okay. How much did we get in cash? Well, for cash, we got this amount. Okay. For accumulated depreciation, we need to debit it to get rid of it. And for our equipment, we need to credit it to get rid of the original amount, right? We should be able to add these up and see that this equals 115, this equals 115. So credits and debits equal, we are happy. Okay, that's our journal entry there. Okay. Now, it's probably going to ask you to, if we checked our work, they're probably going to tell us this loss here is wrong. Okay, but we do need to show this as a positive amount. The way to do this with a formula would just simply be take cell C65 times -1 is one way to do this, right? And it gives you a positive amount. So that's what I would do. I think if you hard code it in, they'll probably tell you it's wrong. All right, so for retirement 4, we're going to assume that the equipment is retired, okay? Meaning we couldn't sell it, it wasn't worth anything, we didn't get any money from it, so we sold it for $0, technically. We got $0 for it, right? So again, use cell B11 there to get your $0. The original cost of the equipment, again, is A4. Accumulated, B4 actually, right? The accumulated depreciation, we just pull from here. Book value at the end of year 3, we're going to pull from here. And then we are going to use the same formula that we used previously. We will just change C65 to C86 here. We'll take our proceeds less our book value, and that will give us our gain or loss. Here we suffered a $70,000 loss. Notice loss auto-populated. We will take our C86 times -1 to get our positive loss number here. We're going to use our accumulated depreciation number. We can see these equal 115,000. So we know our equipment has to be credited for that amount. Okay, and that is project 1. Pretty easy. Like I told you guys, it really shouldn't take more than 15 or 20 minutes to complete this, especially if you're having me walk you through it. If you do have any questions remaining, please feel free to ask me. Let's check our work real quick just to see. It's telling us we are not entirely correct. Not being cautious enough. This is why you pay attention to the details, right, guys? All right, so now we have a gain of $5,000 like we should, right? Okay, so that one I just made a mistake and put the wrong number in there. I apologize for that. I thought it looked a little odd when we did it. Everything else should be good to go though. So, yep. All right. So that is it. Sorry for that little flub there at the end, but that's why the check my work is handy, right? I would have just went on and you guys would have been very upset with me. So yeah, just make sure you're referencing the right cell. I got a little ahead of myself there, but yeah, if you got any questions, feel free to email me and ask. I'm happy to answer them.